Okay, now we are done with the accounting treatment. And now we move towards the final part of IAS 40, which is your real life scenarios, right? Now, to make things even more interesting, let us bring in some situations of where we could use IAS 40 in our accounting firm or under our jobs. I'm happy to. Okay. So there are two situations in our life that we would face, right? For an example, let us take example number one. Okay. I have given you a timeline, right? So before we start off doing a calculation, let us look into what and how it going to affect our accounting in your real life scenario. Okay. For an example, on 1st April 2010, right? What does Mr. A does is he goes and buys a building, an asset, right? Which has 100% business use, right? The cost was 100,000, right? Along with that, the useful life was 50 years. Okay. So that was his plan when he initially bought up the building on April 2010 to use or utilize it fully towards the business. But then eventually what happened was on 31st March 2020, he had a change of thought. He had a change of intention that he did not hereafter want to use the building for business use. Can you see here? This blue color point I have marked. From this date onwards, he is planning on renting it out to a third party. So then you all need to identify from this date onwards, from the blue dot onwards, your IAS 40 treatment gets activated. Right? Why? Because his intention is to rent it out to a third party and earn a rental income. Right? Anything before, can you see here this orange part that I have highlighted? Anything before 31st 3rd 2020 or anything from 1st April 2010 to 31st 3rd 2020 is treated under IAS 16. Why? Because the intention for the 10 years was to use the asset for business. And from 31st March 2020, the blue part, to 31st March 2021, right? He is planning on renting it out to a third party and generating a rental income. So therefore, from this part onwards, you need to bifurcate or you need to allocate your accounting treatments according to your intention of utilization of the business. Okay. So this is one of the scenarios in real life. I mean, this happens in our real life as well. For an example, let's take your father, your grandfather. They initially buy a building, right? Thinking that they're planning on using, on doing their day-to-day business activities. But after 10 years, after 15 years, what they would plan on to do is they would change and they tell, no, 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 I'm not planning on using it for a business hereafter. Let me rent it out to a third party. So this happens. So the accountant working for your father or grandfather or whoever owns the property, he needs to know the accounting treatment of how to treat it across the entire useful life of the business building, right? Okay. So obviously, from 1st April 2010 to 31st March 2020, if you do IAS 16, you can depreciate the asset. You need to calculate carrying value of each reporting period. And number three, you will be identifying any revaluation gains or revaluation losses. Where would they be placed under? They would be placed under other comprehensive income. And why is that? It is because you're applying PP 16, right? But from from 31st March 2020, right? IAS 40 gets activated. That standard gets activated, right? So from that day onwards, you all need to do initial measurement at cost and subsequent measurement. I told you all examiner will specifically mention which accounting model you are supposed to do, right? In this particular question, he is telling us to use fair value model. So you all know fair value model is just simple, guys. Can you see on 31st 3rd 2020, your market value was 120,000. On 31st 3rd 2021, your market value is 165,000. So there is a gain. I believe there's a gain of 45,000, which would be transferred to your P&L, right? This 45,000 would be transferred to your P&L. The reason being is because we are using fair value model. At fair value, each and every reporting period, we will measure the fair value. Any difference, it could be a gain or a loss, will be transferred to your P&L. It will not be transferred to your other comprehensive income, right? So let's see what I have written. Okay. What happens here is the building is purchased, the asset for the use of business, but suddenly there's a change of plan to rent it out to third party. That is what it's happening. Initially, he bought on 2010 with the intention of using it for business, but on 31st March 2020, he is changing his intention. Okay. So step one, from 1st April 2010 to 31st March 2020, you have to use IAS 16 model, right? So you can depreciate the asset for 10 years. You can depreciate this asset for 10 years. Right? And you can find out the carrying value. You can find out the carrying value. So 100,000 was its cost, guys. 100,000 when you bought, the cost was 100,000. It has a useful life of 50 years, right? So your annual depreciation would be 2,000 per year. Per year, 2,000. So then obviously, for 10 years, your accumulated depreciation should be 20,000. That's 2,000 into 10 years, right? So then cost minus accumulated depreciation, you will arrive at a figure of carrying value, which is 80,000. How did that form? How did that form? Here it is. 100,000 versus cost, you minus 20, you will get 80,000 is the carrying value as at 31st March 2020. Right? Now, this is a rule. This is a rule. This is a rule. What does the rule say, guys? It says, now see, when you all are shifting from IAS 16 to IAS 40, right? There is a shifting standard, right? When there is a shifting standard, specifically when from you're changing from IAS 16, which is PPE of asset, to IAS 40, at that particular date, can you see on 31st March 2020, he's changing. You need to calculate carrying value. You need to calculate carrying value. Why are you calculating carrying value? Let me repeat it again. It is because you are changing from IAS 16 to IAS 40, right? So at the date of change, which is 31st March 2020, you need to find carrying value, right? That is what we are doing here. I forgot to write it down. For 1st April, the carrying value will be at 8, 5, 7, into okay. So when you're shifting from IAS 16 to IAS 40, you at the date of shift, can you see here? At the date of shift, which is 31st March 2020, that is the date your intention is changing. On that date, you all need to find out the carrying value, right? So the market value on that date was 120,000. Your carrying value was 80,000. There would be a revaluation gain that would be credited to your statement of changes in equity under other comprehensive income, right? This is all what we know. This is all what we know. This is until here. Let me put it. Until here, it is IAS 16. Until here, it is IAS 16 for y'all. Okay. Now, we are left off with the final part, which is 31st March 2020 to 31st March 2021. Let me ask you all a question. Are you supposed to use on this date onwards for this? time period, financial year, are you all supposed to use IAS 16? No, you have to use IAS 40. Why? The intention changed, right? The intention to utilize the asset has changed. Okay. So since they're using fair value model, it's quite simple, right? You do not depreciate. In fair value model, you never ever depreciate. Why? Because we do not calculate carrying value at all. That's the basic of fair value. Any year, once we go into fair value model in terms of IAS 40, we do not depreciate the asset, right? So we are planning on renting out the asset. IAS 40 triggers from that date onwards, we do not depreciate, right? So what you need to do is you need to calculate fair value at each reporting date, right? And any gain or loss will be taken to P&L. Never ever touch other comprehensive income, right? In terms of when we are using fair value model, we do not touch other comprehensive income for our revaluation model. Sorry, for our fair value model. My bad. For our fair value model, we do not touch other comprehensive income, right? So now let's see. On this date, your fair value was, hopefully my screen is same. On this date, your fair value was 120,000. On your year ending, which is 31st March 2021, your fair value is estimated to be 165. So there's a difference of 45,000, right? That 45,000 would be treated as your investment income under the heading of other income, right? You never ever go and touch your other comprehensive income. Other comprehensive income is only applied when you have revaluation gains if the asset is used under IAS 16, not IAS 40, right? So this is how you present it in your statement of financial position and P&L on 31st March 2021, right? So our first situation of real life scenario was we bought the asset to use a building, and after 5 or 10 years, we use that asset to give it on rent to third party. That was our very first situation, right? During that time, what we did was IAS 16, and then we went to IAS 40. Now, situation number two, what you'll do is you will buy the asset and you will give it on rent to third party immediately, right? You give it on rent to third party immediately. And after that, say about after 5 or 10 years, then you will start using it for your business. So in this type of questions, you will start off with IAS 40, right? Why? Because as soon as you buy, your intention was to give it on rent to a third party. So here you will start off with IAS 40. And then after a particular date, if you're planning on using it for business, then you can use IAS 16, right? Now I'm stressing on a point, right? These two situations have been tested in your MCQs several times. I guarantee that if it's been tested, this is one of the best part that they will test. So make sure you grab your concepts properly, right? Okay, let's look at this question. Okay, Kai purchased an investment property. When was it purchased? It was purchased on 1st January 2001, right? They're telling us to use fair value model. Why? Because it's an IAS 40 property. Okay, it's an IAS 40 property. Yes, they have defined it here, sir. They have told it here. IAS 40. It was purchased on 1st January 2001. The property had a fair value. The property had a fair value of 12 million. Okay. Now, normally, have you ever seen in any other questions that towards the initial stage itself, they will never mention fair value. Always fair value, examiner will give it towards the latter part of the question. But here, why he specifically telling 12 million is we are supposed to use fair value model. Do you all remember at each and every reporting date, you all are supposed to revalue, right? So on 1st January purchased asset, when you purchased, it had a fair value of 12 million. That I put in my time scale. Fine. On 1st July 2001, which is after 6 months, okay, there's a decision now. The decision is being changed. The intention is being changed, right? He's planning on moving into the property and use it for his business. Okay, he's planning on using it for business. So from this date onwards, IAS 16 gets triggered and IAS 40 gets cancelled, right? At this date, the asset had a fair value of 14 million and a remaining useful life of 14 years. Okay, so let's see the accounting treatment of how we could do. Now, IAS 40 is easy because it's fair value model. What you will do is, can you all see a 2 million increase from 12 million to 14 million? Can you all see an increase in fair value of 2 million? Right? It has increased, right? That would be taken to your other income. Okay, so let's go and see. Since the asset was purchased on renting it out to a third party, we will treat it as IAS 40. That's perfectly fine, right? Obviously, under IAS 40, fair value model, you never depreciate. You do not depreciate at all, right? Why? Because fair value model is used. Okay. Now, I told you all, right? There's a gain of 2 million. From 12 million, it is rising to 14 million within 6 months. That gain will be treated under investment income. Will be treated under investment income in your profit or loss. 2 million. Right? Now, I know there are some smart students. You all will be asking, sir, look at this question. The 2 million is increasing, but you all need to understand that 2 million is increasing within 6 months. Okay, it is within 6 months. So don't try to divide it by 12 and multiply it by 6. No, this 2 million is directly for 6 months. Within 6 months, it has increased to 14 million, your market value, right? Okay. So at this part, let me change my color of the pen. Just give me a minute. At this part, until here, follow my dotted lines. Until here, your IAS 40 is done. The IAS 40 is done. From this part onwards, your IAS 16 gets triggered. Right? Don't worry, during examinations, you're not supposed to write any of these. I am only just using it for your explanatory purposes. The least that you all could get would be an MCQ or would be an adjustment. Right? If you all know how to adjust, that mark is yours. Trust me. Okay. Now, coming back to our timesheet. Now, at this point, can you all see here from 1st July 2001, obviously we know we have to start using IAS 16, right? So obviously what will happen? We can depreciate from 1st July. We can calculate carrying value, right? And if there's any revaluation gain or loss, that will be taken to other comprehensive income, right? Not other income, because other income is only used when there's a revaluation gain or loss in your IAS 40, right? Okay. From 1st July, let me again change the color of the pen. From 1st July, they are using it for the business, right? They are using it for the business. So your IAS 16 standard will apply. So what you'll do, obviously you can calculate depreciation. 14 million was the fair value. The remaining useful life was 14 years. You will get a depreciation of 1 million per year. But you all need to understand, from 1st July 2001 to 31st December 2001, it is 6 months, not 1 year. So you all need to bifurcate your depreciation for 6 months only. Okay, so you all need to present in your financial accounts in your statement of profit or loss only 500,000. Okay, so let me do this with you all. Let me show you all how I will show it in my profit or loss. Right, let me show you how will I show it in my profit or loss. So I'll have a expense of depreciation, right, of how much? 500,000. This is towards the last 6 months, right? And in addition to that, do you all remember I had an investment income? income, which was equivalent to 2 million. Here it is. Here you are. 2 million. Right? So my P&L for December would be 31st 12 2001 would be 1.5 MN alone, right? This is I'm just simply explaining it. This is not the way that you would present it in your statement of financial statement. I'm just presenting it for your explanatory purposes, right? So we are done with IAS 40, right? The second recording would be on directly we'll do some past paper questions as well as BPP Kaplan and study hub questions so that you all could even more broaden your knowledge in terms of IAS 40, right? So this is it in terms of IAS 40. If you all have any doubts in this question, please drop me a WhatsApp message or to my mail and I'll be able to respond within 24 to 48 hours, right? Thank you for joining. Thanks a lot.